Forex market situation update. Ladies and gentlemen, welcome back for the second time today, and I consider this to be a very important follow-up update on an existing position we have with the pound Aussie. I felt it was important for me to share some of the money management modifications that we're gonna do here, and also give you a bit of what we feel is ahead as far as the foreseeable future. We're talking about the short-term cycle in essence, and I wanted to clarify that by using a local key level system that is basically new. It's a reaction of us to what happened here over the last couple of weeks, which was this movement that started to present itself. Take a look. This 1 all the way up 2, and then back down again 3, and then 4, and then all the way down 5. Right? All of that happened in the last, I don't know, less than a month. Right? Started around the beginning of February. And we think this is a reflection of the short-term cycle that's trading sideways as a form of technical correction, right? We don't always have deep, deep moves. I mean, in terms of exhausting their full potential. Sometimes we have deep moves, but sometimes we have shallow moves, which end up being just a trading range like this one, right? So here's why the update is so important. First, we're still here, right? We're right now after the big move. Yes, I mean you can clearly see big move last Friday. A day before, we were actually still in profit, and then a huge move last Friday, 200 pip, right? Turned the tables upside down, so to speak. And we're actually registering a loss, right? And not even a small one, because we got 2 trades here and price did go quite far. As you know, it went so far as almost, take a look, almost it caught us out right there. Our stop loss level 77.50. Take a look how close it got. 77.67. That's ridiculously close. That's just 17 pip. Almost taking us out. So now look, I don't know if we dodged that bullet or not. I don't think that's the issue we should focus on. What I think we should focus on is this. Price is trading sideways. It revealed this lowercase sideways movement revealed itself lately before we got in. So we couldn't know that price is going to be doing this inside this range, right? So what we have to do is have a bit of a correction here, a bit of a modification to our original stop loss level. This is not even the original one. This is actually an updated one. The original one was 77. But we're going to do something that we very rarely do, which is push the stop loss level, away from a price action and not in our direction, against the direction of our position. Something that we try never to do, but sometimes the situation calls for it, right? Sometimes we feel the situation calling for it, and this is that kind of situation. We just need to push the stop loss level beyond the lowest line of support here, which is 77.38, right? But we want to push it in such a way that will reflect excess noise if there's going to be some spikes and some irregularities around that level. Price is it could easily slice that level, so we need to reflect a bit of extra space right below that level. So we're going to push the stop loss level by 100 pip, right, to 76.50. 76.50 should be sufficient enough to keep us safe here in case price is gonna have some more, have some intentions to travel downwards and touch that 77.38. But I believe that whether it does or doesn't, it will turn around and not break down, not really break down, right? It could continue trade sideways, but I think it will more likely turn around at some point and head straight to 84.42, which is our primary target and final destination. All right, so we keep the position alive. We push the stop level a bit outside here, right? Back away a little bit with the stop loss level here, and let's see how it goes. Right? I'll definitely come back to follow up on the situation. That's about that pound Aussie. That's about that for the day-to-day Forex market. Enjoy the rest of it, and we'll be back tomorrow. Take care.